Ja, herzlich willkommen zu einer neuen Ausgabe des E-Talk und ich habe ein Interview bei mir und zwar Gold Royalty und wir kennen es im Namen schon. Gold Royalty spricht für Royalty Company und gerade in einem Gold Supercycle oder Superboom, der hoffentlich vor uns ist, sind Royalties eine interessante Option und ich hoffe, der David wird uns, der CEO, President, Chairman und Director ist, 4 Positions in one, der wird uns jetzt erklären, wie das ganze Business funktioniert und was der Unterschied zu einem Mining Company. David, thank you for your time, and I said in my German introduction, it looks like that you are a royalty company. From your name, it sounds like that, and you have 4 positions. That's mean also. I think this is a big difference also to mining companies, and maybe you can explain a little bit the difference between a gold royalty and a gold mining company. Then normally a royalty company has not too many people compared to a mining company. They run a big operations. They have a lot of people. But tell us a little bit more about the royalty company and what is the idea behind why you set up or why your group set up a royalty company.
Well, I come at it from a miner's perspective. Actually, I've spent over 30 years in the industry running operating companies. I've developed 15 mines in my career. And most recently, I was the CEO of Corp and engineered the merger of Corp with Newmont, the largest gold merger in history, $32 billion, to create the world's biggest gold company by market cap and production. And when I was running Corp, I had 20,000 employees. So you can imagine the complexity of running an operating company relative to a royalty company. Today, I have a royalty company with 8 employees. And we could run a business 10 times the size of what we have now with the same human footprint. The scalability of our business is a unique value proposition. Every incremental dollar of royalty revenue goes right to the bottom line, allows us to pay a dividend, and allows us to grow that dividend over time. And it's a completely different risk proposition as well, in that we're exposed just to the top line of the business. We get a percentage of the gross revenue. We don't take any operating cost risks. We don't take any capital cost risks. And Gold Royalty Corp has 200 royalties across the Americas. And so we have a level of diversification that no operating company can hope to achieve. And we have significant optionality to the growth in reserves and resources and leverage to the gold price as well.
When we talk, you say you have a percentage of the revenue. So how looks like a typically a royalty? How was structured a royalty typically?
Yeah, so again, we get a percentage of the revenue. And typically what we do is we provide capital to the explorers, the operators, the developers are looking to build, explore, and expand existing operations. And we take a royalty back in return. And that royalty is perpetual. It stays on the property forever. So as our operating partners explore their properties out, as they drill them out and grow them geologically, we get that exploration upside. For example, within our portfolio of 200 royalties this year, our operating partners are investing $200 million in exploration on those properties. Mm-hmm. We get the benefit of that upside, but we contribute nothing to the exploration budgets. Our royalties, 200 royalties are completely bought and paid for. We never have to contribute another dime into them. And so that gives us a lot of optionality without any exposure to the exploration risk, the operating cost risk, the capital cost risk. So it provides you optimum leverage to the gold price without taking any of the inflation risk that, unfortunately, many of the mining companies are enduring in this inflationary cycle.
Okay, I remember from other royalty company like Welchen precious metals that they structure more or going for only the gold content of a project or the silver content of the project, and then they pay. So they say they get 20% of the gold production from the company, and then they must pay $1,000 per ounce. Is this not the case in your thing? You get a percentage of the revenue.
Yeah, so all of our portfolio is exclusively royalties. The structure you're talking about is streaming, where just the percentage of the precious metals and they get in physical form. and then they get it at a fixed price, whereas we get a percentage of the gross revenue. But that being said, Wheaton Precious Metals does both royalties and streams, and we're open to doing streams as well. Up to this point, our portfolio is exclusively royalties.
Okay. That's a good difference between royalty, or good explanation between royalty and streaming. So I think it's a very important thing that the people understand what both sides means. I'm now on the slide 10 of your presentation, and that is the gold royalty moving forward picture, where you see you have 6 royalties into production, 6 in development, and 6 in advanced exploration. So, but it's very interesting for me to see that your most advanced of production is only in US and Canada. And also from this big exploration, are most of them in US and Canada. You are focused only in the North American, or you're focused also on other regions in the world?
Well, we're throughout the Americas. We're in South America as well, but you're right. The vast majority of our royalties are in 3 principal jurisdictions: Nevada in the United States, and Quebec and Ontario in Canada. So the vast majority of our royalties by number, but also in terms of the underlying value of our assets. But I don't want to leave you with the impression that this is just a quantity play, that we're just throwing as many royalties against the wall to see what sticks. In fact, we have royalties on the 3 biggest producing gold mines in North America. We have a royalty in Canada's biggest producing gold mine, Canadian Malartic. We have a royalty on what will be the 2nd biggest producing gold mine next year when it's up and running, Cote in Ontario. And we have a royalty on the underground extension of Goldstrike, which is the largest producing gold mine in the United States. So we have foundational elements within our portfolio that will provide annuities to our shareholders for decades to come.
One big difference between mining companies and royalty companies, streaming companies, are the valuation what you get on the stock market. Mining companies have sometimes really low valuation, but the royalties have always a higher valuation. Why you think is it this big difference?
Well, because of the intrinsic risk in operating a mine relative to having a royalty. And as I mentioned earlier on, the mining companies take on operating cost risk, they take on capital expenditure risk. They're exposed to that, and they take the most significant proportion of technical risk at the mine site. The operators really take on all of that risk. The royalty companies just get a percentage of the top line. And again, don't need to contribute anymore. Once they own the royalty, don't need to contribute any more into the mine site. And they take all of the exploration risks as well, the operating companies. We get the benefit of their exploration programs, but we don't have to contribute to it, nor do we take that exploration risk on. We're really a financing vehicle. We provide access to capital for the explorers, the developers, the operators, who otherwise might not be able to access equity capital markets efficiently. And there's a disparity in the multiple, you correctly pointed out, between the operators and royalty companies because of that disparity in risk. And we don't take as much risk on. We provide the capital, but we don't take the day-to-day risk the operators do.
That is a good point. You are a financial vehicle, so that means you also must be financed. So how you finance yourself that you can finance the royalties?
So typically, the royalty companies trade at a much higher multiple, have a much lower cost of capital, so they're able to access the equity capital markets much more cheaply than producers, developers, and explorers do, because again, of the intrinsic risk involved in actually operating and owning mines. And so we take advantage of that arbitrage. So we're raising capital much more cheaply, and then we put that capital to work with the royalty, or with the operators, I should say, the explorers and developers, and then take a royalty back in return and get that royalty re-rated at a much higher multiple than is implicit in the valuation of the operating companies.
You have already 6 production assets. What is a yearly revenue coming out of this that we get a size of it?
It's an excellent point. The slide you were pointing at earlier on, slide 10, just provided highlights of our 200 royalties. We actually have 7 producing royalties. We have another 20 in various stages of construction. And that provides 60% compounded annual growth in revenue over the next 10 years from a collection of assets that are very well advanced, either currently producing or ones that are in very advanced stages of construction. That's industry leading. And that's allowed us to introduce a dividend less than 1 year after our IPO in March of 2021. We have about a 1.5% yield. And given that our business is so scalable, given that we don't need to expand our workforce to crystallize that revenue, stuff to basically collect royalty checks from these mines that are built out, every incremental dollar of revenue goes right to the bottom line. So that gives us great potential to set over time.
Okay. What can or in what direction you have really an extended portfolio, so you have a lot of royalties and so on, but what news flow maybe we can expect for the next 6 to 9 months from your side?
Well, I would say a couple of things. One is the continued de-risking of our underlying portfolio of development stage assets. As these mines are built out, constructed, and de-risked, they're getting closer to production and realizing that revenue growth. But as I also mentioned earlier on, our operating partners are investing $200 million in exploration this year on their underlying properties. That's a lot of exploration catalyst, a lot of reserve growth, resource growth, and we benefit from that. That provides an obvious catalyst for our shareholders and allows us to enhance the value of our royalties by actually investing in additional capital into.
One question for coming back to the financing thing. You say you have a higher multiple, and with this higher multiple, you can raise equity to a cheaper price. At which price was your last equity raise, so that we can see now so that we see what was really when we look at the share price at the moment, how was really the price of them. So
we did our IPO in March of 2021 at $5 US per share. The stock is trading in the 280 range right now. And that's because of a swoon in the equity capital markets, not just in gold equities, but in particular, the broader equity markets. There's been a significant sell-off. So we've been very, very careful about issuing any stock in this environment. We haven't issued anything since our IPO. We have used our currency to start to roll up some of our peer companies. That allowed us to grow from an initial royalty portfolio of only 18 royalties in our IPO to over 200 today. So we took advantage of the relative disparity in valuation between ourselves and our peers, because our peers have gone down even more than we have. And with that allowed us to consolidate and grow our royalty portfolio to be critical mass very, very quickly.
Okay. David, thank you I think it was a perfect start interview. And hopefully we have time then when I'm back maybe in Vancouver or in Toronto next year on the PDSC. Maybe we can do it again. Hopefully, especially when I look at your share price, you are really coming down to 210, 220 or something. And it looks like that you have really here a good base or build up called a double bottom and very interesting chart formation. And you say you pay still now or still a dividend now? Or?
Yes, we do, because we have significant revenue currently, and we have industry-leading revenue growth as well, with a very stable cost profile with only 8 employees. So our G&A costs are not going to go up, and we could run a business 10 times the size with the same number of employees. That's the beautiful thing about our business. It's scalable. We don't require any additional capital. 200 royalties are completely bought before, and so we can just harvest returns.
Yeah, thank you for them. I make now a short summary in German. Royalty Company, wissen wir, was eigentlich geht. Interessant ist, für alle, die es nicht wissen, der Unterschied zwischen Royalty und Streaming. Royalty, da sind Sie an dem Projekt beteiligt und Sie kriegen einen Percentage vom Umsatz, während das Streaming auf eine gewisse Komponente der Produktion geht, zum Beispiel auf Gold, Silber, Kupfer und so weiter. Und die werden verkauft quasi, und der den Stream kauft, der kriegt dann auch nur diesen Teil von der ganzen Mine. Und wenn die halt irgendwo anders dann viel Gold finden, sie haben nur einen Silberstream, dann haben sie halt Pech gehabt. Aber sie sind halt dort festgelegt, während der Royalty Company auf das ganze Projekt ein Leben lang quasi diesen Anteil hat. Und sie haben über 200 Royalties drinnen. Sie haben einige bekannte Produktionsroyalties, Canadian Malartic, wissen wir von Osisko früher, das ist die alte Osisko-Mine, haben sie einige, dann sind einige in Development, er hat da nur 6 aufgeschrieben, im Prinzip sind es 14, das heißt innerhalb kürzester Zeit werden dort 20 produzierende Assets sein und dementsprechend wird der Umsatz steigen und das ist eigentlich ganz wichtig. Sie sind alles Leute, die er selber war bei Corp, bevor es dann übernommen worden ist von Newmont. Und das sind natürlich, die kennen sie aus und wissen, was sie tun. Und das Schöne ist, sie haben halt kein operatives Risiko. Also es gibt kein operatives Risiko, weil das operative Risiko trägt ja die Produktionsfirma. Das heißt, wenn dort die Kosten steigen, ist es im Prinzip egal, weil sie kriegen einen Anteil am Umsatz und der Umsatz wird hoffentlich steigen, wenn der Metalpreis steigt. Hier sieht man dementsprechend die Vorwärtskurve von den Umsätzen. Sie zahlen schon eine Dividende und was auch für mich interessant war, was ich auch gezeigt habe, ist, der Aktienkurs ist jetzt gestern geschlossen bei 2,66. IPO war bei $5. Das heißt, der Kurs hat sich quasi halbiert, sie zahlen schon eine Dividende und die damals natürlich bei einer IPO reingegangen ist. One question, how big was the IPO?
So we raised $90 million US. We were aiming to raise $30 million US, but the order book was so oversubscribed, we ended up tripling the size of the IPO. We achieved a post-money valuation of $200 million at the time, and now we're double that size given the consolidation we've undertaken over the last year and a half.
Wow. So it's now a good time to buy, then the all other ones buy to a much higher price.
Well, absolutely. We're trading at about 0.5 times the underlying value of our business. And typically, royalty companies in better markets trade somewhere between 2 to 3 times net asset value. And given the quality of our portfolio, the diversity of it, there's no reason we shouldn't be trading at that multiple in a rising gold price environment.
Also, sie werden momentan mit 0,5 des Net Asset Value bewertet. Eine Royalty Company, die normalerweise in einem normalen Markt oder einem guten Markt wird mit 2- bis 3-fachen bewertet. Und da kommen wir zu einem sehr interessanten Punkt, den habe ich vorher vergessen zu sagen. Seine Firmen, wo er eine Royalty hat, investieren heuer 200 Millionen in Exploration. Und das ist kostenloses Upside-Potenzial. Das darf man nicht vergessen. Das ist ein wahnsinniges Upside-Potenzial, denn er ist ja am Projekt beteiligt und nicht an irgendeinem Stream, sondern und wenn die dort mehr finden, dann wird natürlich der Wert des Projektes massiv erhöht und sie müssen dafür nicht einmal einen Cent ausgeben. Das ist eigentlich das Wunderbare dran. Gefällt mir extrem spannend. Dividende schütten sie auch wenn es nur, muss man nachschauen, 1,3, 1,4% sind, aber es ist schon eine Dividende, also von daher ein ganz spannender Markt, wenn man relativ sicher am Rohstoffmarkt, hier speziell natürlich Edelmetallmarkt, mitverdienen will. David, thank you for your time. It was a pleasure. Hopefully we have time to do on the PDSC or something sometime again. Good luck with the market itself. Then if the resource market going up, we know exactly how crazy the market will be. Not only that you make more money with your streams, also the valuation on the stock market going up much higher.
Well, thank you for your time.
Thank you.